after a brutal sell-off that saw Netflix down as much as 14% in the after-hour session last night. The stock reclaimed most of the losses, ended the day lower by just 5%. And with that move, the Nasdaq and the tech sector hitting an all-time high today. So is this just further proof that you just can't bet against big tech in this once-in-a-generation rally? Guy.
Last night, I thought after those Netflix numbers, I thought for sure Netflix would trade down to that 305 level, basically the level that it broke out from in April when they reported a great quarter and then raised guidance for this quarter. And we got down to 340 or something. If you told me the stock would close where it closed, I'd be like, there's absolutely no way. That quarter, in my opinion, gave shorts every reason to lean into it or gave people that have been long the stock every reason to take profits. Forget about it. You want to talk about domestic ads? That's fine. Even international ads missed, and it missed for the first time in a long time. And it didn't miss by a couple thousand. It missed by about 500,000. That, to me, was a significant number. I find it shocking that it came back like it did. It's the market telling you, basically, the Netflix model isn't broken. It's just a one-quarter thing. I'm not certain of that, by the way, and I've been pretty steadfast. But you can't deny the price, actually, was pretty incredible.
And the Q3 guide was also weak.
Lousy.
So it wasn't just a miss on the second quarter. Right. So why do you think people are still so bullish?
If you want growth, if you want performance in the marketplace, you go to a handful of names. Netflix has been one of those names that you go to. I like Guy, was shocked that it had an extreme recovery, but I did think it was going to cut in half its losses. I thought it might have gone green and then traded off again. But if you really want growth, you have to go here. The gun is to your head. You need these bulge bracket tech names, and this is where you have to go for growth.
That sounds like a terrible reason to be in a stock.
Well, the way I phrased it wasn't the greatest.
But it's worked out so far.
Yeah.
Right, that's true. That's true.
Very nicely. Yeah.
Well, look, for Netflix, this is a company that was priced to perfection. So ultimately, I still think Netflix, despite this heroic rally back today, is a stock that's priced to perfection. And I do, I'm not going to dispute the growth over value argument for the market. In fact, I think that's actually a very strong one. I think in Netflix case, we're forget the fact that these guys are delivering on the content side and they're delivering on even the new subs, albeit slower yesterday. As far as I'm concerned, you have to price in competition. Everything we've been talking about in the media sector for the last 2 months is exactly why I'm worried about Netflix.
We had a number of all-time highs, though, in today's session. I mean, Amazon, Google, Microsoft,
Google, right.
Facebook.
I really was not expecting that at all. We talked yesterday about the ETFization of that space, and I really expected to see a sell-off there. Google's my biggest position. I'm happy about that. We'll see if it should be trading here when they report next week. But I think Netflix started to sort of find some sort of bottom. I thought we'd see more wholesale downgrades, and we didn't. In fact, we saw a few now's your opportunities.
Right, upgrades, yeah.
And so that sort of created the floor for the stock. And then you had Powell come on, and he was somewhat dovish, as well as talking about trade policy and how those with tariffs don't do well. And maybe his voice has some sway.
But this should convince people. We've had this argument over whether Powell being more dovish is actually a bullish thing. Right. When Powell was dovish today, the markets screamed higher. So you can say whether it was Netflix, but they both happened at the same time. So Netflix ran, but I think it definitely was Powell taking the lead there on a more dovish stance, the for now or the slow and steady versus these aggressive, methodic rate hikes.
Look, Netflix was not leading the market today. Let's be clear. I mean, triple Qs have outperformed the S&P by 7% since the market's peak. Tech has been outperforming. There's no question about that. As far as Netflix goes, I'm not really surprised that the analyst community is scared to be more cynical on Netflix at this point because these guys have been so wrong over the last couple of years. I mean, let's face it. And I've been wrong. I mean, I think a lot of people have been talking about this company in a way that the valuation was not sustainable. There's no way guys come in after this and downgrade the stock. But tech overall, every one of the leaders, if you look at even the electronic arts or the gaming sector, the semis were up 1.5% today. Semis have bounced heroically off the 200 today. They are arguably the reason why the market's been going higher, and I think it continues to.
I mean, it was a broad-based rally in tech. Let's be clear about that. It wasn't just a turnaround in Netflix. But if you add to that a path that Powell lays forth, which is effectively the same path that we thought that we were on before, does that give us the recipe to be in the same trades that have been working all year?
I'm not, well, in the short term, I think yes. I mean, his comments today absolutely gave the market some air cover for sure. But, we talk about a flattening yield curve like it doesn't make a difference anymore. The speed with which it's gotten down to 25 basis points to me is pretty staggering. And I know Tony Dwyer will say you have 12 to 18 months of sort of runway for the market to continue to go higher. I'm not certain that's the case anymore. But in terms of value growth, we talk about value stocks. I mean, Microsoft, which I think we've all been pretty bullish on, and steadfast, they report on the 19th. That stock's now trading close to 27 times forward earnings with an EPS, even if they raise their EPS growth is nowhere in the ballpark. So even value stocks to me are becoming a little expensive. That to me is a concern. The fact that the market didn't sell off today off the back of Netflix with every conceivable reason, not least of which was you can talk about the faux pas in Helsinki yesterday. Market doesn't seem to care about anything right now.
That's right. And they don't. And to your point, they don't care about the yield curve.
They don't.
So why should we care about the yield curve? Why does everybody bring up
because
the yield
the banks
curve?
don't care about
the Fed put forth a paper that says don't fear the yield curve, and we're all fretting about the yield curve?
Look, there's no way Powell's going to talk about the yield curve. Okay, there's no way Powell's going to say anything in terms of trade wars or tariffs until he has to. You've got a Fed meeting. The next time they're probably going to hike is September. I don't think he needs to commit himself to anything before then. And ultimately, if I look at the rest of the market,
he really spoke about it a little bit today, though. But he did talk about it.
He said we'll wait and see. He said we'll wait and see.
But less tariffs are better than more tariffs. I think he did say that. So he has spoken about it. He's going to be adaptive. He's going to be flexible, and that's what the bulls wanted to hear by the tape that we saw today.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.